Hi everyone, welcome to the US Individual Taxation Part 1 classes. Today we are continuing our Chapter 1, which is Preliminary Work and the Taxpayer Data. In this session, we'll be discussing in detail about the applicable tax credit, which is in continuation of the Part 1 of the applicable tax credit. This is Part 2 of applicable tax credit. In this specific video, we'll be learning in detail about the credit for adoption expenses, then credit for contribution to qualify retirement plan, and then after we'll be discussing foreign tax credit. So these are the three important tax credit we'll be covering in detail in this particular video. So let's dive into for more detail.
That means the fees you are paying for adopting any child, right? And the court fees and the lawyer fees and any other expense which are being directly related for the adoption of the kid, right? So if you are adopting any kid, then government support, because you are taking care of someone who has no one on the earth for take care, right? So you are adopting someone and you are doing things for the benefit of the nation as a whole, right? Because you are helping.
I think we missed the point 1.6.3.
1.6.3. No, we have covered this one recently.
Below that.
Which one?
This one adjustment, like.
No, we have discussed, like, we have discussed this right here. If you see the credit for elderly age 65 or over, permanently or totally disabled, credit is 15% of the base figure. But how do you calculate the base figure? That is mentioned here, adjustment to the base figure. AGI minus social security payment minus railroad retirement pension if you're receiving, minus half of the AGI in excess of this much amount. So once you reduce all these things, then it comes to the base and multiply by the 15%, right? That amount or this 5,000 or 7,500, whichever is lower, is being allowed as a tax credit, right? Shivam, okay?
Yes, sir.
Okay, so now we are on fourth point, which is credit for adoption expenses. Adoption expenses are expenses which we have paid for adopting any child. That may be adoption fees, court fees, attorney fees, lawyer fees, or any other direct expenses relating to the adoption of the child. So for that, you are helping the nation by adopting someone, that you are reducing, the burden on the national resources. So they give certain tax credit for that, for doing this good work for the nation. So the credit is expenses up to $14,300. And if the child is with special need, then consider to be 14,300 flat, even if the actual expenses are less. So if you are adopting any child, so maximum tax credit is 14,300 or actual expenditure you have incurred, whichever is lower. But if you are adopting a child with the special need, then flat 14,300 is being allowed, right? So qualified children are those under the age of 18 or those who are physically or mentally handicapped. So one, if you are adopting a normal child, so up to the child should be less than 18-year age. Or you can also opt for any child of any age. So there is no age limit if you are opting anyone who is physically or mentally handicapped, right? And there is a phase out also. If your adjusted gross income is more than $214,520 but less than $254,520, so in this bracket there is a phase out of $14,300. So we'll do the math for it. An unused credit can be carried forward for the 5 years. So for example, in the current year, let's say your tax liability is coming out to be $10,000 and you have adopted a child who is physically or mentally handicapped. So you'll get 14,300 credit straightforward. right? So your tax payable is $10,000, but you have tax credit of $14,300. So in that case of scenario, $4,300, which you have excess tax credit, that you can carry forward in future 5 years and set off against the tax liability of future period. That's what the point number E is, right? And married taxpayer must file jointly. So now let's do a math over here. Can you all see whiteboard?
Yes, sir.
Yeah. So here, what they are saying for credit for adoption expense, what all adoption expense, like your attorney fees, your court fees, or any paperwork fees or anything which is directly related for adopting any child, right? So the expenses which you have paid is up to $14,300 is being allowed, right? And for special child, 14,300 straightforward allowed, even though you have incurred less expense. But now what they are saying, there is a phase out. If your income is more than 214,520, right, but less than 254,520, then it will phase out this 14,300 in the proportionate amount. But if your income is more than $254,520, then nothing is allowed. So here again, for the phase out, we'll be going through the 3 scenarios: 1, 2, and 3. In the first scenario, let's say your income is $200,000. In second scenario, your income is, let's say, $230,000. And in third scenario, your income is $300,000. And first case is normal child. Less than how many years? How many years? Oh, guys, you're not responding. Less than 19 year age. And how much expenditure you have incurred? Let's say $10,000. $10,000. $10,000. The another situation you have is disabled. Right? And expense, let's say you have incurred $5,000. How much? 5,000 and $5,000. Right? So what will be the tax credit available for adoption of this child? So in the first scenario, your income is less than how much amount we have discussed? Less than 214,000. 214,520. 214,520 254,520. 254,520. So this is less than 214K, right? And this is more than $254K, right? Just a short form. So if the amount, if your AGI is more than 254K, then nothing is allowed, right? Yes, no?
Yes.
If income is more than $254,000, then nothing is allowed. And if income is less than $214,000, then entire amount is allowed. But the question is for this: when your income is in between these two brackets, what is the total gap? 254 minus 214. How much is it? How much is it? 40,000.
40,000.
How much? How much is it? 40.
40,000.
Are you guys with me?
Yes, sir.
So total
Yes,
is
sir.
14,300 divided by 40,000 multiply by $10,000. Sorry. First, let's calculate on per 14,300 divided by 40,000. How much is it? Can you do the math for me?
0.35.
0.35. 0.35. That means 0.35 per rupees. Right? So how much is 230 minus 14520? 230 minus 214520. How much is it? 230,000 minus 214520. How much is it?
Sir, 15,480.
5480.
Sir, 15,480. 15,480.
15480. So 15,480, right? And if you multiply by 35 cents, 0.35, how much is it? 15480 multiplied by 0.35, how much is it?
5418.
Say that again, 5418.
Yes, sir.
So this 5418 will reduce from this minus 541. Sorry, this 5418 will reduce from 14300 minus 5418. How much is it? 14300 minus 5418 is Can you do the math for me?
8882.
8882, right? So this amount or this amount, whichever is lower, is being allowed. So allowed is 8882 in this case. Make sense? Garima, Rajat, Vivek, Vikas.
Sir, the 14,300 should divide from 40, like the 14,300 was given, right?
Yes, that is the total maximum amount which is being allowed, right? So
Allowed.
14,300 is the total amount which is allowed. And how much we will be phasing out over the $40,000, which is the difference between these phase out limit. So you get to know 35 cents per dollar of increase in income will reduce, right? So every $1 income increase, 35 cents of the allowable credit go down, right? So
Yes.
what is the total income increase? 15,480, right? Total income, which is more than 214520, is 15,480. So how much the tax credit should reduce? That is 5418.
Yes, sir.
Right? So 5418 minus 14,300, you get to know the amount, lower amount, right? And the amount you have paid is $10,000. So whichever is lower,
Yeah, we'll consider that.
we'll be considering that. So that's how this 8882 amount will be allowed. Make sense?
Yes, sir.
Yeah, man. Good.
Yes, sir.
Now, coming to disabled child expense. So in case of disabled child expense, your income is $200,000 and you have incurred $5,000, but straightforward you get 14,300, right? Even though you spend less, but you get 14,300. And in this case, you will not get anything because you are exceeding the limit. And how much you'll be getting over here is 8,882 because your income is $230,000. Make sense? Shubham, Mayank, Rajat,
Yes.
Yes, sir.
everyone good? Vivek, Vikas, Garima?
थोड़ा डिटेल में बताइए सर इसे 8882 कैसे आया?
No, we have calculated just here 8882. So 14,300 divided by 40,000. So that means every dollar your income increase, so your eligibility reduced by 35 cents. Right? So total income which is increased from 214,520 to 230,000 is 15,480. So if your income is 15,480 more than the base amount, that means you will be eligible for less amount by 5418. So 5418 you'll be reducing from the total maximum limit, which is 8882. This is what we have calculated right here.
Okay, sir. Okay.
So yeah. So for example, if here the expenditure was of 5,000, then you might have been chosen this 5,000. But whereas in case of disabled, you will choose more, whichever is higher. So that is the difference in both the scenario. Make sense?
Yes, sir.
Sachin?
Yes, sir.
Okay. Okay, so let's go back to the notes. So now if you see the fourth point and correlate with the examples we have done. So what they are saying, adoption expense, we all know, adoption fee, court fee, attorney fee, lawyer fee, documentation fees, everything related expenses, right? So credit will be expenses up to $14,300. Child with a special need is considered to be 14,300 even if the actual expense is less. Qualifying children are those which are under 18 and those who are physically or mentally handicapped, right? Now phase out limit is AGI from 214,520 to 254,520. Right? Any unused credit can be carried forward for the next 5 years. For example, if your total tax liability is $10,000 and your tax credit is 14,300, then excess amount of 4,300 you can consider as a tax credit in future year, in the next 5 years. Make sense? And married filer must be file a joint return. They cannot claim this adoption expense for married filing separately. So if there are couple who are adopting any child, they must have to file joint return to avail the benefit of this tax credit. Otherwise, for separate return, there is no tax credit for adoption fees. Make sense?
Yes.
Now, coming to the credit for contribution to qualified retirement plans. So here, if you see the qualified retirement plan, which we will discuss earlier also. There are traditional retirement plan as well as Roth IRA, which are like majorly prevalent. In addition to that, they have like 401k plan, 403k annuities, 457 plan, simple plan for self-employed, and SEP for self-employed, right? So here you might have seen this point is coming in the itemized deduction as well as in the tax credit. So if you are taking standard deduction, then you can take tax credit for this much amount for the same contributions, right? So these contributions are really good for the tax planning purpose. If you are taking itemized deduction, then you cannot take tax credit for the same amount. But if you are taking standard deduction over there, then you can use them for the tax credit purpose, right? So there are two type of contribution plan majorly. One is traditional IRA, the another is Roth IRA. In the traditional IRA, there are further two subcategory. One is deductible and one is non-deductible, right? So for the deductible, you can take into the itemized deduction, and for the non-deductible, you can take the tax credit also, right? But the maximum is $2,000. Up to $2,000 max credit is 50%. That means $1,000 will be your tax saving at the max, and that will also phase out if your AGI is more than $65,000 for married filing jointly, $48,750 if you are filing as a head of household, and if you are filing other than head of household or married filing jointly, the limit is $32,500. So if your AGI is greater than 32,500, then you cannot take this credit, right? Shall I do some math, or it's easy to digest? So same way, how in India we have pension plans, LIC plans, right? It's very much.
एग्जांपल और बता दीजिए सर, एग्जांपल के साथ.
Yes. Like in India, how we have pension plan, right? Same way in US, it is called IRA, individual retirement account, right? So individual retirement accounts or traditional IRA, Roth IRA, 401k plan where like employer do some contribution, employee do some contribution. 403 plan also where like employer do some contribution, employee also do contribution. 457 simple plan or SEP plan is majorly for self-employed people who do like how in India we have PPF, right? What is PPF? Any idea?
Public Provident Fund, right?
Public Provident Fund, where we do the direct contribution, no employer contribution is there, right? So all these contribution, similarly in US, if you are making, then maximum $2,000 contribution in a year is being allowed, and 50% of that you can take as a tax credit. That means maximum tax credit you can take is a $1,000, but still there are further condition that your AGI should not be more than 32,500 in case of single or married filing separately, or for the widower, right? But for the head of household, 48,750, and married filing jointly 65,000, right? If your income is more than that, then you will not be getting this tax credit, right? Make sense? Sachin, Vivek, Vikas?
Yes, sir.
Mayank, good?
Yes, sir.
Now coming to our favorite part, education tax credit. So in America, there are two schemes. One is American Opportunity Tax Credit. Formerly, it was known as HOPE tax credit. And the another one is Lifetime Learning Credit, right? So there are two category of tax credit under the education tax credit scheme. So America Opportunity Tax Credit, AOTC, is first, if you see left hand side, just look at only left hand side first. The credit up to $2,000 of expense, 100% is allowed, and more than $2,000 but less than $4,000, whatever is the difference, 25% of that is allowed. So maximum tax credit, if you see, the first $2,000 complete plus 25% of the another $2,000, which is $500. So maximum credit is $2,500 is allowed, right? We got like how we got to this 2,500 amount.
Yes, sir.
So what I'm saying is this 2,100%, and then for this
25% of 2000.
So maximum is 500 max, right? So if you add up these two, it will result into 2,500. So maximum amount is $2,500, right? Right, everyone? 2,500, you got it? How we get there? Now, second point is eligibility. Who all are being eligible to avail this American opportunities of 1 second. So American opportunity tax credit. So second point, if you see the eligibility, who all are being eligible to do this. First one is enrolled at least half time during one academic year. That means if the academic year is of 12 months, so you must be enrolled with the academy for more than half a year, right? Second is the person must be pursuing the degree or recognized education credential, right? It should not be something online learning. It should be from the organized university, institution, or college. So either degree or any recognized education. Third is not have completed 4 years of higher education before the tax year. So this tax credit you can take only at the max 4 years. Because in US, if you see the higher education is of 4 years. In India, if you see like graduation is of how many years?
3 years.
Are you guys with me?
3 years.
Right? So in India, we have a graduation in 3 years, right? In US, it is 4 years. So this is majorly for the higher education. Higher education is graduation and more than that, right? So they're saying if you see the C point, not have completed 4 years of higher education before the tax year. D point says not have claimed the credit for more than 4 tax years. So the individual can claim the tax credit at the max 4 years of his or her higher education, right? Not more than that. Not have been convicted of any drug abuse at the end of the year, right? This is also very much important because in college, many students get addiction to the drugs, right? So if you got caught by the police as a drug addictive, right? So then also you'll not be getting the benefit of this tax credit, right? And the phase out limit is for a single 80,000 to 90,000, for married filing jointly 160,000 to 180,000. If the income is more than 90,000 for individual, then no tax credit. If the income is more than $180,000 for married filing jointly, then no tax credit is available. And married tax filer must have to file a joint return. Right? Do you want me to do some?
If married filing jointly and both are studying, so the tax credit.
Yes, they both can take. Right? Shall I draw some example and do some math for this? Or is it simple, easy to digest? Mayank, Vivek, Rajat,
Sir, bit will be helpful, sir.
So let's just take a look again. What they're saying, the maximum credit is $2,000 up to $2,000 100%, and after that 25%, but at the max to the $4,000 expense, right? And then also it will be available at the max 4 years, right? And who all are being eligible to do this? The person who is being studying in the college or university for any recognized course or affiliated course, right, for more than half of the year, and does not have claimed this tax credit for more than 4 years, and is not convicted as a drug addicted by any police. And then some phase out situation. Now let's draw an example. So can you all see whiteboard?
Yes, yes.
So let's say two scenario, total expense $3,500 and $8,000. So in this case, like, what is the maximum allowance? $0 to $2,000, 100%, which is $2,000, right? And then 2,001 to 3,500. How much is it? 25%, which is 1,500 multiplied by 25%. How much is it? 1,500 multiplied by 25%.
370.
375. So in this case, the total allowance is 2,375. And the another case is 2,001 to maximum 4,000 multiplied by 25%. So in this case, it will be $2,500. That is the maximum amount limit. Now let's assume this is single and this is married filing jointly, and their AGI. Their AGI in two scenarios. So what is the AGI limit? Is 80 to 90,000 or 160 to 180,000. So let's say AGI is $85,000, or let's say $175,000, and another is $100,000, or here it is $200,000. Right? So in this case, oh sorry, this is AGI. This is AGI. So this is maximum eligible amount. This is maximum eligible amount, right? It's not a deduction, it's an eligible amount, right? So what will be the deductions, or what will be the tax credits? So in this case, it will be nil. In this case also, it will be nil, right? Makes sense? Because it is more than 90,000 and it is more than 180,000. So hence, there is no tax credit for these two cases. But here it is 85,000, right? So 85,000, what is the limit? Phase out limit 80 to 90,000, right? So 80 to 90,000. So if you say 2,500 divided by 10,000, how much is it? 0.25 cent per dollar income, right? What is the extra income they have? $5,000. So 5,000 multiplied by 0.25. How much is it? 1250. Yes, no?
Yes.
Yes, yes.
Yes,
So
sir.
1250. So here the eligibility was 2375 minus 1250. How much is the remaining balance? How much is the remaining balance?
1125.
So this much has been allowed here, right? Now coming to this second scenario. The second scenario, if you see the limit is 160 to 180, right? So the maximum amount is 2500 divided by 20,000. This is 0.125, right? In that case of scenario, we'll be multiplying with how much is greater from 160? 15,000, right? 175 minus 160, 15,000. If you multiply 15,000 by 0.125, how much is it?
1875.
1875. And if you reduce 2,500 minus 1875, how much is the balance?
625.
625 is allowed here. Make sense? Garima, Rajat,
Yes, yes.
Yes, sir.
how we got to 625 and 1125?
Understood.
Anji, Sachin, Vivek, Vikas,
Yes, sir.
got it?
प्रैक्टिस करेंगे जब ज्यादा क्लियर होगा सर. ठीक है.
But you understanding the concept, like how we got to this 1125 and 625? So if you see, let me go back to the theory, then I think you would be in a better position to evaluate. Let me present notes. So if you see here, the credit is up to $2,000, 100%. That you all are clear? Yes, no? Are you guys clear? Up to $2,000,
Yes, sir.
everyone agree, 100%. So $2,000 is been good. Then additional $2,000 up to $4,000 is 25%, whatever is more than 2,000, right? So that in 3,500 it is 1,500, and in case of 5,000, another example which you have taken, it is complete 2,000, right? So 2,500, and we come to the how much amount another was. Sorry, I missed. So another amount was less than that, right? So that two scenarios being very much clear. What is the maximum eligible amount, right? And then the third point, if you see, is the phase out limit. Phase out limit for single case is between 80,000 to 90,000. If the individual income is less than 80,000, then entire eligible amount is being allowed as a tax credit, right? If the income is more than 90,000, then nothing is allowed, right? If income is in between 80,000 to 90,000, then you will be reducing proportionately, right? So proportionate was 25 cents per dollar of income. 2,500 divided by 10,000. That's how we have calculated, right? So 25 cents per dollar. For $5,000, it was, for the $5,000, it was 1250. That's how we reduced to 1250, right? And then if you see married filing jointly, in that case, phase out limit is 160 to 180. Bansalji, your voice. So if you are married filing jointly, then phase out limit is 160,000 to 180,000. That means 20,000 is the phase out. That is the reason we divided 2,500 by 20,000. So per 0.125 cents per dollar income was the proportionate rate. So we have 15,000 more income. So we multiplied 0.125 with the 15,000 to reach to the amount which is not eligible. Only the balance amount is being eligible. Right? Got it? Now you can correlate the theory with the example.
Yes, sir.
Garima, Rajat?
Yes, sir.
Yes, sir.
So now, shall we jump on to the second part, lifetime learning credits? So we are done with American Opportunity Tax Credit. This is allowed only for the 4 years, right? America Opportunity Tax Credit is being allowed for how many years? 4 years, and only for the higher education, right? The second one in the education system is the lifetime learning credit. This is available throughout your life, right? The first point, if you see, the credit is 20% of the expense up to $10,000. That means up to $10,000 expenditure if you have incurred, so 20% of that is being allowed credit, right? Can be claimed for any number of students in the family. That means if you have 2 kids, 3 kids, 4 kids, 5 kids, you can claim up to 20% of the $10,000 you have spent for each children, or even to yourself and to your spouse as well, right? So available for unlimited number of years. There is no restriction of 4 years, which was in case of American Opportunity Tax Credit. And this is applied for undergraduate, postgraduate, or professional degrees, courses at an eligible institute to improve the job skill. So it applies to all of them and does not require half-time enrollment for the semester. And it's not required that student or kid need to go to the college for more than half of the year. That is also not required here. But the phase-out limit is less.
It does not apply up to the K-12. It does not apply up to high school, yeah?
Sorry, say no. Yeah. So these all both are for higher education, yes. So this is for graduate, postgraduate, or professional degree, or courses for skill development courses also. It's been very good point, Shivam. But the phase out limit is comparatively less. So 59,000 to 69,000 for single, and for married filing jointly 118,000 to 138,000. Right? Shall I do some math for this one? Or comfortable to everyone? Yeah.
Yes, sir.
Rajat, Mayank.
Yes.
Good, sir.
Good. Sachin, Vivek.
Okay, sir. Okay.
Simple enough. So 20% of the expenses up to $10,000. For example, if you have incurred, let's say $7,000 for the study of one of your kid, right? So 7,000 multiplied by 20%, that means $1,400 is being allowed each year for each kid, even though to your spouse and to yourself, right? But if your income, if you are filing as an individual, as a single, and your income is more than 69,000, then nothing will be allowed. If your income is less than 59,000, then entire amount is allowed. If your income is in between $59,000 to $69,000, then it will be phased out in the same proportionate as we have discussed earlier. Make sense, everyone? Okay, so before jumping, okay, yeah, we can do this foreign tax credit. So foreign tax credit, this I think we discussed earlier also in our very first class when we were discussing about double tax avoidance agreement or treaty amongst the different countries. So this is basically, for example, if you are a US citizen, so your income outside the United States of America also being taxable in the United States of America, because you are a resident and citizen of the USA. For you, the worldwide income of your is being taxable in the USA. right? And wherever you have earned those income, then you might have paid certain tax in that particular country also, right? To avoid the double tax loss on the individual or on the company who is having operation in the multiple country and they are paying taxes there also, and government come up with the scheme is called foreign tax credit, right? What it says, tax credit basis double tax avoidance agreement treaty between the US and the other country on the taxes paid in foreign country for which income is taxable in USA. A taxpayer may apply income taxes paid to the foreign country or the US, right, as a credit against the US tax liability, or may use such taxes as an itemized deduction, which we have discussed earlier. So you can claim either in the itemized deduction or as a tax credit, right? So if you are suggesting your client to go for standard deduction, then I think you can take the benefit of those foreign taxes paid in the tax credit also, right? So this will be a good tax planning. So credit is lower of taxes paid in the foreign country or taxes payable on foreign income in United States of America, whichever is lower, that much amount of the tax credit is being allowed. For example, you are a citizen of US, and you have a global income of, let's say, $500,000 total. Global income is how much? Maybe let me draw an example so it will be easy. Let's say this is Mr. X, citizen of USA, right? He has income from USA, $200,000. Let's say from India, $100,000. From Canada, let's say $50,000. And let's say from Australia, they have $50,000. So now in US, their entire income, this income will also be taxed over here. So for the US income tax return, they need to add this $200,000. So the total taxable income in US is how much? $400,000. And they have paid, let's say, taxes of $5,000 here, let's say $8,000 here, and let's say $15,000 here. They have paid taxes in this country for their respective income. Let's say in US, for this total income, let's say they have tax rate of 20%. So how much is the tax? 80,000? Yes, no?
Yes, sir.
20% of 400,000, 80,000? Yes, no?
Yes, sir. Yes.
So in this 80,000, if you see, the 40,000 is for the income which they have earned in US, and 40,000 other than US income. US income other than US income. Right? Yes, no? What is the total amount of taxes they have paid outside the US?
28.
How much is 28,000?
38,000.
Hmm?
Yes, sir.
28,000. So they can take the credit of this 28,000 here, and on this they need to pay only 12,000 taxes. So that is what is foreign tax credit. So this 28,000 or 40,000, whichever is lower, is being allowed as a tax credit. So in this case, this one is lower. For example, if instead of 28,000, it was of 48,000, then maximum 40,000 would have been allowed. Make sense?
Yes, sir. Sir, if a person paid outside of USA is more than 80,000, yeah, we can say more than 40,000, then the USA government refund the amount.
No, they will give credit of 40,000. Then they are not paying any taxes, no, in US. So why the case of refund?
Okay.
So as per US, on the foreign income, tax is 40,000. If you have already paid more than 40,000 outside US, then you are not paying any taxes to me. Then why I should refund?
Okay, sir. Thank you. ठीक है, sir.
Very good point. Mayank, Rajat, Divya, Shubham, any?
Sir, I want to know that you had written in the red that foreign tax credit of 48,000. I'm not able to get that. Like the 28,000 was the other income. I get that. But the 28,000 amount which you have written foreign tax credit and
So
above
no,
that.
I'm saying the other scenario. In this scenario, our scenario, 28,000 is the tax we have paid in another country. Whereas in US, it was 40,000 on the same income. So in US, you will get a credit of 28,000, and in US, you'll be paying 12,000 more taxes. But if you look at another scenario, if you have been paid 48,000 to outside country,
Yes.
right? Hypothetical assumption. And in US, the tax liability is 40,000, then you will get the entire 40,000 credit.
Okay, sir.
Then you have to pay nothing to US if you have already paid more outside the US. Right?
Or
Everyone?
yes. Or otherwise, the more 12,000 we have to pay if we are
Yes.
already
So
in US.
whichever is lower,
Whichever is.
US tax payable, or you have already paid outside US, whichever is lower, that amount of tax credit is being allowed. It's called foreign tax credit. Right? Rajat, Garima?
So I guess
Yes, sir.
so I
Yes,
guess there would be a option in the 1040 form of your W2 form.
No,
where you
1040.
enter this amount.
1040.
Yeah,
1040.
1040.
Yes. There is an option of foreign tax credit.
And the individual has to provide the proof also, or just the amount?
Yes, proof. You should have proof. If IRS asks, then you can show the document to IRS. When you file income tax return, no proof attached to that. But when IRS asks for it, you need to produce the proof, because you are signing a declaration that you have reviewed each and everything, and to the best of your knowledge, all the information you are submitted to the IRS is correct. So that declaration you are signing.
So while computing the taxable amount, so far what we've learned, there are multiple documents and forms that needs to be filled in order to get the final amount.
Yes. Very true. And as an tax practitioner, we need to verify those.
And keep the documents as a proof also in case of future if there's a discrepancy
Yes.
with the IRS.
Yes.
Okay.
So as a practitioner, we need to verify those documents. Yes. IRS required just income tax return, and on that the client is giving you can say declaration that he or she has reviewed all the information, and to the best of his or her knowledge all the information